Hi guys, I'm back again with another video, right? So I did on Monday market breakdown, right? So I'm just quickly going to recap on what happened. So on Tuesday, there was a report on with regards to the inflation, which is the CPI Consumer Price Index in the US, and I did say that should the market if it was giving us a higher high, then I was expecting more continuation of sales to the downside. However, that did not happen. That did not happen. And I also remember saying that if this is not the level we should be worried about, then we must also pay attention to this one because that is where we could get a double bottom. And I did talk about the possibility of a double bottom, right? So if you look at that candle, you find the such candle when there are news involved, and then the market continued with that direction, right? So in other words, we ended up not getting the sales that we were expecting on the DXY, meaning that the dollar became strong, right? So let's go to the next pair, right? Which is, it was GBPUSD. So on GBPUSD, you'd remember that the market was somewhere around about there at the top, and then you're expecting the continuation of bars to the upside, but that did not happen as well because of the news, which is the CPI, which was low, and it decreased from the previous one, from the previous number or the reading. And also, if we can add a technical point, we could see that the market at some point was respecting that previous high, which I did not necessarily see at the time, right? So the market, in other words, GBPUSD also didn't play out. We didn't get the buys that we were thought that we were going to get. And obviously, guys, as I always say, that if the dollar index is strong, then that means all the currencies that have the US dollar as the code will sell. Then all the currencies that have the dollar as a base, if the DXY is strong, then that means those currencies you will buy them, like your USD CAD, USD Swiss francs, USD JPY, right? So, but considering the fact that we had a low number in the CPI, which is meant low inflation, then that is why the dollar became strong, right? But as of today, there will be, during the New York session, there is news that we're expecting on the PPI. So what is PPI? PPI is the producer price index. So the producer price index actually it tells us about the inflation that is experienced by the manufacturers, which is the service providers, right? So when the PPI reading is high, right? Then that means there is high inflation that is in circulation or that is going on, because if the cost of the, in other words, PPI is the cost that the manufacturers experience for the goods and services that they provide. So if the cost of them producing those things is high, then that will be passed down to the consumers, which is the consumers will end up paying more, or the things will be expensive, right? And then that also means a high PPI means high inflation that is going on in that particular country, right? So when the inflation is high, the only way to combat and to stop raising inflation to points that we don't want them to be is by increasing interest rates. So if the PPI becomes high, then you will, the most likely thing that will follow is rate hikes, right? So it's also important to familiarize yourself with the terminology that is used in terms of fundamental analysis, which is rate hikes and many more other things. So we're expecting though that reading today in terms of the PPI producer price index. So considering what happened on GBPUSD, so GBPUSD we also did not get the buys that we were anticipating because of the CPI yesterday, right? And also PPI gives us an indication of the future inflation, whether it's going to be at the peak or it's going to be at its lowest, right? So let's move on now, because I'm still just doing a review before what I'm anticipating from today going forward. So we are currently on USD Swiss francs. So on USD Swiss francs, I was expecting the continuation of sales to the downside, considering the fact that the price was below this price point. But due to the fact that the dollar was strong yesterday, and you can see this is USD Swiss francs, the DXY was strong, and then that means the US dollar is the base currency was strong, and then hence we ended up having a buy. But as of the current moment, you could see that we're forming some sort of an ascending triangle, So anything can happen from that point. But if the dollar becomes strong, then that means we will have continuation of bias to the upside. And then that will also confirm that the fact that this is an inverse head and shoulder that is emerging or kind of like forming. However, if that does not happen, then we're most likely to experience, we'll most likely be expecting selling opportunities again to the downside. If we're treating that as a higher high, maybe that is where we're gonna get a higher low over there, right? But it will all depend on what's going to happen on the PPI, right? So in other words, we ended up not getting the sales that I was anticipating on USD Swiss francs, as you can see on the screenshot, right? So the likelihood now is that we can buy or anything can happen, but above that the resistance level, that is when you're going to start looking for buying opportunities. But moving forward now to Euro USD. So Euro USD also did not give us the bias because GBPUSD is correlated with GBPUSD, right? So you can see at the top where that trend line, then that nice double bottom, and then that candle was a result of the CPI report yesterday. Meaning that the market ended up being a sell. But if you look at the current market conditions, if we're treating this as a resistance level, then should the dollar continue being strong, then if that is a lower high, then this is what I'm currently anticipating on Euro USD. Yeah, let's check to the 15-minute time frame, right? So if the dollar is going to continue being strong, then that means this is a lower low, lower high, lower low, and then that's a lower high, and then maybe that's when you're gonna get to the sells. However, if we do not get that, then that will mean that this is what's going on here. So this means that this is what we'll be having currently on Euro USD, right? So if we're treating this as a minor support level, then we would like to see Euro USD coming back here, which is by means of higher high, higher low, higher high. Then if this is a higher low, then that's when you're going to get the buys. However, if that does not happen, then you're going to get the continuation of sells to the downside. So this is what I see. But all in all, we also didn't get the buying opportunities that I was expecting at the top due to the fact that we had CPI and stuff yesterday, and then you can see that there's a clear double top, and then the market eventually went to the downside, right? So moving forward now to GBP JPY. So on GBP JPY, you would also remember that on GBP JPY, I was anticipating buying opportunities to the upside, meaning that at the top, because the market was somewhere around about above that resistance level, so I was thinking that maybe it was going to continue going to the upside. However, that didn't happen, and then you could also see that this was some sort of a head and shoulder that formed over there. So if the market goes to the upside, then that is when you're going to get the retest and then the continuation of sales to the downside. And also, even if we don't focus on this one, but you can also see that this is an emerging head and shoulder that could be signaling the potential that the market is going to sell to the downside. However, if that is not where how we're supposed to cater for the market, then this is how we would treat it. Meaning that if this is a higher high, higher low, higher high, higher low, higher high, if this is a higher high, then this is when you're gonna get the bias to the upside. But I would say at the moment, the momentum is currently looking to be with the sellers more than it is with the buyers, right? So on GBPUSD, Euro GBP, I did share the analysis on the previous video that we have the support level that is being respected over here, and then should the market fail to respect the support level and break it impulsively or even correctively, which is if it breaks it like this, if it breaks it impulsively, then give us a correction, then that's when you're gonna get the continuations. However, if that doesn't happen, then the market will most likely see be playing around here this level and then keep going to the upside. But we'll also see what happens based on what's gonna happen on the PPI, which is on the dollar, meaning that if the dollar becomes strong, then that means most likely the euro is going to be weak, and maybe that is when you're going to get the sells. And then it's going to be a massive sell if euro GBP ends up being a sell, because look at this. If euro GBP ends up being a sell, then we're talking about something, an impulsive movement that will go on, that will hopefully go on up until those two levels, right? This is what we will be expecting to see happening on Euro GBP. Let's check it on the 4-hour time frame. Yeah, it's gonna be much more clear here. And as you can see on the 4-hour time frame, that this could be the left shoulder, this could be the head, and then that could be the right shoulder, and then it would be anticipating continuations of the head and shoulder pattern to the downside, because we've reached the resistance, and then the market is approached that level correctively. So if we break at that support level, then that's when we're going to start looking for selling opportunities to the downside on Euro GBP. And then you also have a small version of a head and shoulder that is also forming over there. So that is most likely where I would say I'll be looking for sales below that support level, then this first TP level, and then that's the final one. So it's a very beautiful structure and pattern that I see on Euro GBP currently. So yeah. So let's move forward now to the Dow Jones. So you would also remember that on US 30, above that level, which is that 32,343, we're expecting that the market is going to continue going to the upside, which is being our first TP and then the final one. However, due to the CPI yesterday, and then you would see that the market impulsively went to the downside, and then this is impulse move, then this was a correction, and this is going to be an impulse. However, if your state is to buy, then they're going to get a version of a double bottom here and then go back to the upside. But if that doesn't happen, then you're most likely going to see USD coming back here, breaking out, then giving us the selling opportunities to the downside. And then let's drop it to the 1-hour time frame now so we can see what's going on. And then if you look at the current moment, USD is not giving us signs of that we could reverse and go to the upside, considering the fact that it's moving in this zone, even though it's a support level, correctively. So this is a clean thing, this is where we might get the sells, the continuation of sells to the downside, because we must be wary when the market approaches this part a strong level, but in a corrective manner. It would make sense if it was approaching it in a similar fashion as this, then that is most likely where we're gonna say maybe the market is gonna change direction because it's support and then give us those buys. But by looks of things, sells are looking imminent more than the buyers, because you can see impulse move, correction, impulse move, then this is a larger version of a correction, and then inside we even have a head and shoulder that is forming. So we might have the breakout, then the retest, and the continuation of sales to the downside. Then if that doesn't happen, maybe you get something like this and then continuations to the upside. So this is what I see on US 30, but from the previous analysis, US 30 did not respect the support. I mean, that support level, because it ended up breaking it and complying with the selling opportunities. So remember, guys, that fundamentals do not determine market direction. We only take advantage of fundamentals for short-term movement, right? It's for short term, they don't determine. We're just taking advantage of the fact that the market is volatile within that short period of time, right? So also another thing that I want to clarify here is the fact that Mondays are trap days. So yes, guys, Mondays are considered to be trap days most of the times. But a Monday, for example, on Monday, we saw these buys, right, on US 30, right, of which we were not wrong. We're not being trapped, because if you see something on a Monday and then it plays out according to your direction, then if it made you money, then that's good. But when it doesn't make money, you must not be like, Monday is a trap day. Don't be that person. If you're a guy, don't be that guy. If you're a lady, don't be that woman, right? Because you took advantage of the fact that this was a small buy, even though the market ended up being a sell, which is if you had done everything correctly, which is put your stop loss above entry, which is trailing a stop, then you would have secured the profits that you made on that Monday, right? So it's all about the matter of which days do you want to trade, what best suits you, right? So moving forward now to NAS100, you'll also see on NAS100, NAS100 is a similar thing to, they move similar with US 30. So this is exactly what I was talking about, because I was expecting that Nasdaq to actually go to the upside, but due to the news yesterday, which is the fundamentals, we ended up not getting those buys, and that's okay. But the smartest thing that one could have done is that if you had positions open here, then it's important to move your stop loss above entry so that you secure the profits that you would have made already, instead of having trades going to a positive and then going into the negative and blowing your account, right? So it's important that if the market moves into a direction, move your stop loss above entry, right? So let's check on what's happening currently. Then at the current moment, NAS100 is moving similar to US 30, meaning that should the market not respect the support level anymore, then that's when you're going to get the continuation of sales to the downside, right? So yeah, but initially it didn't play out. So this is an analysis that I did not make on the previous video, but I was actually convinced that Euro AUD was going to continue selling to the downside, because I saw this sort of an inverse head and shoulder that was forming. However, it did not happen because it was respecting the support level, and then it ended up giving us this what do you call this now, this triangle or falling wedge, if you may, and then it's currently continuing going to the upside, that is where we most likely could get our next turning point. But by looks of things, the Euro AUD is buying up until that 1.49581, right? So it's clean, it's clear. I hope it is to you as well. So let's see what's happening on gold. So on gold, guys, you would remember quite clearly that I was very worried about this resistance level over here, because I also did highlight, I remember correctly, that I said even as much as we are outside of the structure, in as much as we could get those buys, but we must be cautious of the fact that after that breakout, gold was moving correctively, because the market was somewhere around about here. Okay, so the market was really somewhere around about here, and then I did talk about the importance or waiting for that retest before having the market to go to the upside, right? But we did not get that higher. We got the higher low, but we did not get another higher high, which is the market going to the upside. As a result, due to the CPI again yesterday, then the market ended up going to the downside. And you would also see that this is a clear head and shoulder pattern that formed. But let's focus on what's going on currently. So currently on gold, you'd see that if gold is not tricking us, or is indeed giving us this inverse or reversal pattern that I see over here, then we're most likely that at this support level, we're going to get the buys, but depending on what happens on the DXY. However, if that doesn't happen, then gold is most likely going to do this, give us the retest, and then continue going to the downside. But it's important to note that this is a strong key level from gold. So we're not expecting the market to just break it in any type of way. But at the current moment, we would see that there is a possibility of gold selling to the downside. However, if we are to buy, then buys would only make sense at this support level or above this level, which is, if you want to buy, this is where you could use a buy stop, which is above that particular level. Hopefully that the market is going to go to the upside. But if it comes back to the support, then we're looking for something like a triple bottom, and then the continuations to the upside. And then it would even make more sense in terms of this, which is first and second. Then this is most likely we're going to get the third touch. And then if this is a second touch, then we could get another touch a day before having the market going to the upside. So yeah, guys, but in terms of review or the previous market breakdown, I would say the market did not play out due to the inflation report that happened on the US, and it decreased from the number that they thought it was going to be. So all eyes now are on the PPI, which is the producer price index, which is also high impact news. So yeah, guys, if the reading is low, which is a low CPI, PPI, means that the products or the services, which is on the food industry and other industries involved in the PPI, If the reading is low, then that means the goods and services are undervalued, and that affects the currency negatively. But if the PPI is high, that means there is a lot of inflation that is going on because it costs the manufacturers to produce things high. Then that means the consumers are also going to pay more for those goods and services that are being produced by the manufacturers. So in order to stop the inflation from being outrageous, then that is when the Fed decide to hike the rates. And then when the interest rates are increased, then that means a positive for the currency because investors are going to start investing in the US because of how strong their currency is. So yeah, guys, that is basically what I wanted to share today. But like I said, I'm currently working on something so that I can start making videos on fundamental analysis. So I hope you took something valuable from this video. So if you watched up until the end, please do me a favor, like, subscribe, and comment down below. I will most definitely see you on the next video.